How large a hit do you think we're going to see to the overall cat bond market as a result of Hurricane Milton?
Well, luckily, now we have, as you just summarized, the latest information of how the event actually did make landfall. And luckily, this is not the worst case scenario in terms of insured losses, and I think also in losses and damages for the state. So it's still very hard to estimate and give like number ranges, but as you said, it's up to 15%. That's what we thought earlier. Cautiously, we would say it's likely less. It played out in the end a bit better than at some point was forecasted.
Tanja, what is covered here? Is this just cover for high winds, the impact of those high winds? Because one of the things that we're seeing in Florida is flooding. Heavy rains as a result of LN, potential storm surge coming ashore with Milton. How does that, the impact of the rain and the storm surge impact the triggering of these bonds?
Oh, that's a really interesting question, because typically in the majority of catastrophe bonds, you only have the wind policies covered. So the flood should theoretically be not covered. However, in such a severe event like we're seeing with that hurricane, it's very hard to tell in the aftermath from where the damages came. Was it flood or was it wind? So there's something that we call leakage. So when you assess the impacts of the storm, you will need to take into account that likely you will also have to cover some of the flood and storm surge losses, because you can't really just distinguish them from wind. That said, there's another segment in the cat bond market that, on the other hand, really covers exclusively the flood segment. So these are, of course, directly linked to the very extreme flood surge and dangerous conditions that we're seeing right now.
Tanja, you're no stranger to hurricane season, of course, in the States, but I'm curious if the strength of this storm and the records that it's breaking in so many ways changes your strategy on some of your positioning around it. Does that mean in the recent days, weeks, months, in anticipation of the storm, have you ditched any of that positioning?
Yes and no. Like we definitely obviously follow all the forecasts for the season, and as we all know, it was very much in the media. 24 was supposed to be a very active season, so that is something we do take into account into positioning in the portfolios. On the other hand, these forecasts have a high degree of uncertainty. So it's more about, you know, putting your exposure into quality names, things you feel comfortable with going into the season, and maybe also to say, as cat bond investors, you need to expect to have a loss at some point. Like that's really part of the strategy.
Tell us a little, Tanja, about the secondary market here. What kind of liquidity do we see in the secondary market? How is it performing?
Yeah, I think really good, really positive. I mean, the asset class is quite new, just a few decades old, basically, 20, 25 years. So it's still developing, and we've seen around the events also before and likely after lots of bids and offers of exposed names, which we think is very positive. So liquidity can be there if you want to trade. And I think also interesting is that we can observe that non-related catastrophe bonds, for example, something that covers Japanese earthquakes, so completely unrelated, is also still tradable, normal prices, no impact, so you can rebalance parts of your portfolio despite an event ongoing. So it's a very, very positive development that we're seeing in terms of maturity of the secondary market.